Hi all. Well, we're certainly living in unprecedented times since I last spoke to you a fortnight ago. Stock markets have continued to fall as a result of the coronavirus, with more and more economies feeling the effects. The US Dow Jones is down around 23% for the fortnight, and the Australian All Ordinaries is down around 22%. For those not familiar with indexes, they are effectively a measure of the movement of the stock market, both up and down. We understand that many of our clients are anxious about the future, and obviously in this situation it's not just about finances but about people's health. Markets are down around 35% from their mid-February highs. While falls of this magnitude have occurred many times throughout history, it has been the speed of this fall that has created a lot of fear amongst investors. Only the 87 stock market crash happened over a shorter period of time. It fell around 25% in one day, with total falls of around 50% over a 2 to 3 week period. It might surprise some people to learn that during the global financial crisis, markets fell about 57%. Whilst this was obviously concerning, it did happen over a 16-month period. Interesting enough, the Chinese market is only down around 14% by comparison, and has risen from its early February low point up to early March, but has retracted a bit since. If for a minute you allow me to set aside the very real and important health issues the world is dealing with right now, from an investment point of view, how bad is this? I recently had the opportunity to sit in on a webinar with AMP's Chief Economist Shane Oliver. He provided an industry briefing on COVID-19. And pretty much he echoed the sentiments of many analysts in saying this would be viewed as more of a disruptor than a long-term economic downturn. Most commentators are suggesting a short recessionary period will be followed by a rebound in the second half of the year. Obviously, they all say that the longer the virus drags on, the greater the economic impact it will have, and therefore potentially the longer the recovery. Unfortunately, no one knows how long it will last and how much lower stock markets will fall. The fact when the market falls, there is quite a bit of buying at the moment, suggests that many people are seeing value in the cheaper prices. This will hopefully provide some support against further big falls. A report I read recently from one analyst who'd been in the business for 26 years, he said how bullish he was now and how it had been quite a long time, had been for quite a long time. He thought that this is a once in a decade opportunity to buy shares in quality businesses at cheap valuations. We've provided a link to the Shane Oliver's full presentation if you wish to watch it, and we've also attached an article with some key points to keep in mind when writing out these rough times. Some of the key things that we would normally suggest focusing on is remembering that switching from shares to cash and back to shares at the right time is extremely difficult and fraught with danger. Often it will take years to recover if you're not part of an upswing when it occurs. As it often comes quickly, these rebounds. Unfortunately, none of us have the crystal ball. When an investment has dropped in value, you do not lose money unless you sell at that point. So remember, selling at the low point is the only way to crystallise or lock in any of the paper losses. Remember, things are never bad forever. As this chart shows, the share market has always recovered from significant events through history, and we don't believe this time will be any different. Lastly, just to reiterate to all our retiree clients that have income payments drawn down from their cash and fixed interest portions of their investments. This normally contains around 5 years worth of income, and this allows the share and property portion of your investment a long time to recover from a downturn. Secondly, if you are a wealth accumulator client who is saving money towards their retirement or other objectives, remember prices are now cheap, and buying now represents a good opportunity over the longer term. Again, we know this is a difficult time, so if you're concerned in any way whatsoever, please do not hesitate to contact us. Now, our job is to be a financial coach, to help you make smart decisions with your money and avoid some of the common mistakes that are often made at times like these. I'd like to take this opportunity to wish you good health to all yourselves, your family and your friends.